Thanks for everybody for tuning in. Always exciting to do these webinars and a pleasure and a lot to talk about. And I don't want to keep everybody too long, but so I want to kind of go through the important points here. But after having such a difficult first quarter of 2025, we'll look for this to follow through and to see the market get back on track and to see things falling in line with performance over the second quarter, which has been positive overall. As you can see here, performance is up 27% in the second quarter. Perhaps more importantly, right now, performance in April is actually quite solid historically from 2016 to present. Double-digit returns in the month of April, which is also good, the third best performing month for Bitcoin. So again, we're coming off some difficult price action in the first quarter of 2025, the market is well positioned right now to start to see some upside, short of perhaps some short-term headwinds, which we'll discuss. Now, what we want to talk about are what are the key factors that are going to drive Bitcoin over the course of the next quarter and perhaps into the end of the year. So here's a list of influences on price action in Bitcoin over the coming weeks, months, and over the next year. And here they are. So the list is, and we'll run through them, post-halving, supply dynamics, institutional adoption, macro conditions, regulatory developments, market sentiment, geopolitical and economic stability or instability, and technological advancements. So let's run through and just discuss. So of course, Bitcoin every 4 years goes through a halving event where the reward that's given to the miners is cut in half. Each 4 years that's cut in half further. And what that does ultimately is tightens the issuance of new coins, which then has upside pressure on the price. And we've seen historically in the year that follows, about a year after halving events, you start to see the impact, positive price action from the halving event. There is this trend. And so as we come into the second quarter of 2025, the timing lines up quite well for Bitcoin to start to benefit from that halving event from 12 months ago. And we'll see that trend follow through, which is, again, a positive price catalyst for Bitcoin, which could start to play out in April of this year. Moving on, institutional adoption and ETF flows. This has been something that's been a big story since the start of 2024 when the ETFs were introduced in the US, the Bitcoin ETF, and then later Ethereum ETFs and more ETFs coming. This has been a widely successful experiment, which is now a proof of concept. The ETFs have been very much celebrated. Volumes have been extremely high overall. And this has sent a signal to the market that crypto and Bitcoin are here to stay, and there's plenty of demand for the asset class. And so we've continued to see this all throughout 2024 and into 2025. And names like BlackRock, which have led the ETF initiative, and then you have companies that are taking on exposure like MicroStrategy, now Strategy, that's Michael Saylor's company, and then other companies like Metaplanet have been consistently adding Bitcoin to the balance sheet and kind of leading the way in terms of this institutional adoption of Bitcoin. Of course, banks are also upping their human capital and kind of assigning desks to be covering the crypto asset class. Moving on, macro conditions and monetary policy. This is something that's significant as it has an impact potentially on shorter term correlations. Particularly, investors have been focused on monetary policy, specifically Fed monetary policy. And as things have correlated, at least in the short term, any indications of the Fed leaning more towards more accommodative policy in which interest rates are going to be lower for longer is something that is welcomed by investors and which does have a positive impact on risk assets. Now, because Bitcoin is still considered to be an emerging asset, it's a young, new emerging asset, it's in many ways treated by a lot of market participants as an emerging asset, as an emerging market, which makes it risk correlated. Now, of course, we know that if we look at Bitcoin's properties, ultimately, Bitcoin is a store of value asset given its properties, its limited supply, and the nature of how Bitcoin is structured. It is much more analogous to something like gold in terms of its overall structure than something like stocks. But again, because it's viewed as an emerging asset and an emerging market, there is this correlation shorter term with stocks. And so as the Fed leans towards more accommodative policy, it has a favorable impact on risk appetite, which then has a positive impact on Bitcoin and cryptocurrencies. Again, a short-term correlation, but something to pay attention to. Of course, if the Fed is unable to lean more accommodative and has to focus more on inflation and risks to inflation and not being able to afford the opportunity to kind of move towards more accommodative policy, and has to think about higher rates or keeping rates, where they are and not cutting, then the market is upset about that. It has a risk-off implication, risk-off impact, and there could be some weight on cryptocurrency as a result on Bitcoin, which we've seen a little bit of in the first quarter. Macro conditions overall, again, have not been favorable. The U.S. administration has brought with it some major unpredictable policies that the market is trying to get a handle on and is having a hard time doing so. Trade tariffs have been a big deal, and possible worry of trade war has been a big concern, and it certainly weighed on sentiment in the first quarter, which has had an impact on Bitcoin and cryptocurrencies overall. Moving on, regulatory developments are going to be important. The incoming, or the now new administration, the Trump administration, has been exceptionally warm and friendly towards cryptocurrency. We know there's been talk of this strategic Bitcoin reserve, cryptocurrency reserve. We've heard of all these appointments that have been made in the U.S. government towards crypto-friendly histories of people that are appointed that are kind of going to lean that way. And so now it comes down to, over the coming months, seeing regulation and regulatory clarity in a way where it's looking to embrace the space and do it in a warm, friendly way. And so as we see those come into effect, that should start to have more of a positive impact as we move forward into 2025. Market sentiment and retail participation. Well, just overall, this is important to keep an eye on because, when you see the volatility in the market and the price action, it then filters through to social media. And then that can have kind of a negative impact and weigh on sentiment on the retail side. And then it can have maybe perhaps a bit of a negative influence if price action has been weighed down, a little bit more of an exaggerated impact. And so this is something that you need to watch. We do think that we are reaching an inflection point here, which could end up being something that is a very positive catalyst for the outlook. And geopolitical and economic instability, another concern that plays a little bit into the macro, but we have pressures going on around the world. I think that, when we talk about this specifically, conflicts that are seen, potential trade wars that escalate into something further, developments in the Middle East, developments relating to China and the US and Russia and the Ukraine. These types of things need to be watched closely, as this instability can have an impact on the market. Now, what's interesting again is we talked earlier about short-term correlations with risk, but the reality is that as Bitcoin continues to mature, it will find itself as an asset that should really benefit in times of instability and economic uncertainty. We think that that's going to be the case. And we actually think that the silver lining with the pullback that we're seeing in US equities in the first quarter, which has right now weighed on Bitcoin as well, is that we're going to start to see a point in which, if equities continue to decline, where we believe Bitcoin will start to find its footing and outperform on this value proposition as a store of value asset. And we think that that will start to shine through a little bit more now than in previous cycles when we saw pullbacks in stocks, because Bitcoin has been more adopted. And now that it has been, and institutional and traditional investors are looking at it, they're really going to get an opportunity to see why this is actually an attractive asset for portfolio diversification. Finally, when we talk about things, we look at technological advancements. And so this is something that's ongoing, whether it's with Bitcoin and developments on the Lightning Network, which is a layer 2 solution, which allows for transactions to happen in ways that go beyond just simple movement of money, but more complex transactions that can happen that don't weigh on the on the layer one on Bitcoin. So Lightning has been a good solution, and we continue to see developments there, or whether it extends beyond Bitcoin and into other chains and layer two solutions there, and developments in decentralized finance and smart contracts. These things are going to continue to push forward and bring us to a place where a lot of the talk and the theory around the benefits of cryptocurrency are going to start to move from back end talk to front end solutions that people are going to start to realize and appreciate. And we're kind of starting to see that happen now, which is very exciting. As far as the technical analysis goes right now, when we look at the chart, here's the story right now. Bitcoin trading roughly around 85,000, but ultimately, just even though we've seen a nice recovery out from the yearly low, we're still kind of caught in a sideways chop right now. So while the price action has been constructive, we really do need to see more upside back around above the high that was seen there, that you can highlight it here, about 95,000, to suggest that the pressure is officially off the downside. Until then, there could be risk for another setback here, and we could see deeper setbacks. Now, as far as where those setbacks can go, we don't believe those setbacks should extend much beyond 74,000, which is a major previous resistance turn support in the form of a previous record high from 2024. Of course, there's always overshoots in markets, so it's possible that we go down below 74, down towards 70, but any drops below the 70 to 74 area should be really limited, which sets the stage for a compelling opportunity over the coming months, months, and years, for Bitcoin to, as it's always done, been so well supported on dips, to once again be supported on dips into this latest pullback ahead of the next major upside extension, which sets up an attractive opportunity, we believe, in the second quarter of 2025. So there you have it. There's an overview of how we are looking at Bitcoin, where we see we're at right now, and what the catalysts are going forward, and why it does look like the second quarter is lining up to be quite attractive for Bitcoin and for the asset class overall. So with that, thank you very much, and we'll see if there's any questions. If not, then we can address them at a later date.
Well, thank you so much, Joel, for this valuable information. We really appreciate your knowledge. It's time for the Q&A session. We're going to give some minutes to see if the participants would like to share some questions, but I have a question
Sure.
while we wait. So Bitcoin's volatility is both exciting and nerve-wracking. So what's the best way for traders, especially those newer to crypto, to manage risk and avoid getting shaken out?
Just the best way is always to, never to apply leverage to your trading, to trade unleveraged, especially if you're just dipping in, to take whatever it is that you're investing, and that is what you're applying to your positions, and you're not leveraging those. That is the best way to not get shaken out. And it allows you to think clearly, and it allows you to not sweat or stress or not sleep at night. Leverage can be okay if used properly, but certainly not if you're just coming into something. And if you are wanting to use leverage, then use it to the point where you can still sleep at night. That's the best way to kind of come into the market.
Thank you so much, Joel. Well, I think we don't have any more questions, but
Okay.
would you like to add something else before we say goodbye?
No, I would just add to anybody that's tuning in that, it's a very exciting time. We've seen over the past several years as LMAX Digital and LMAX Group has kind of taken on our business of being in the digital asset industry and in Bitcoin and other cryptocurrencies, that it's a bet that's paid off handsomely. We've seen the growth here at a time when, several years back, there was little adoption. Banks weren't involved, institutions weren't talking about it, and all of this has been happening over the past few years in a big way. And that validation is something that we're very proud of. And yet we're only just getting started right now, we believe, and there's plenty of amazing future ahead for the cryptocurrency asset class. And again, as we look at Bitcoin into this dip in the first quarter, we just believe it's yet another opportunity to take advantage of an asset that really should continue to only go higher over time, and the cryptocurrency asset class overall should continue to benefit over time.
Thank you so much, Joel. Thank you for those who joined the webinar, and thank you for those who will be seeing the recording on our channels. We want to invite you all to visit our crypto page on our website, Black Bull Markets, where you'll find over 30 cryptocurrency pairs available for trading. Our CVDs allow you to trade cryptocurrencies without needing to own or manage that underlying assets. And additionally, we encourage you to visit our social media channels, blog, and articles where Black Bull Markets and the LMAX Group keep you informed with the latest market news and important updates. Thank you, Joel, for preparing this valuable webinar, and thank you for our community for attending today. We appreciate your time and participation. Thank you